Soft landing is not our base case. The famous words that came out from Jerome Powell during the FOMC press conference last week. Wow, what an amazing ride that equities and bonds had after that comment. Now I'm going to get into the FOMC meeting and why it's important, what was said, what you should be careful of, and what it means for the economy and the markets going forward. But before I get into that, my name is Daniel. I run an organization called InfoVest. InfoVest promotes financial literacy, teaches you about investing, trading, connects it with the macroeconomics out there. We relate it to stocks, bonds, commodities, currencies, forex, and yes, cryptocurrencies as well. Now, going back, let's talk about the FOMC, the meeting, what Jerome Powell said. Right at 2 o'clock on Wednesday, we had the statement come out, which was basically really in line with the previous meeting that the FOMC had. The only thing that was interesting was the projections that they released with the statement. Now the projections comes about 4 times, 4 out of 8 times. They have about 8 meetings in a year, so it comes about 4 times in a year, and this was one of them. And we got to see the dot plot, we got to see their economic projections and where they see interest rates this year and next year. So as they came out at 2 o'clock, released the statement, released the projections. They also didn't hike rates. They left it where it was. And initially, when this came out, the market, stocks, and bonds sold off. But as people were digesting the dot plot, and before 2:30, the press conference, right? And if you look at the projections itself looks like soft landing. It looks like, hey, GDP's, they revised it higher, meaning better growth. They revised also the unemployment number. They made it lower for next year, meaning that a job's going to be stronger next year. So GDP is going to be stronger next year. Jobs are going to be stronger next year as well. So the rise of unemployment is not going to be that bad. And on top of that, the inflation projections kind of stayed the same. And if you look at the what was the big kicker that shocked the markets initially, that knee-jerk down in stocks and bonds, was the Fed funds projections. So they left the rates for this year the same, meaning that they project one more rate hike this year. Although the markets are pricing in a 40% chance or less than that of a rate hike in November, and about close to 50-50 in December. And all these projections can rapidly change as we get more data in the coming weeks. And especially if we get more hawkish data, more stronger data, showing the economic resilience, the jobs, and especially if inflation ticks up higher, then yes, you're going to expect that markets are going to see that another rate hike. Now, what shocked the markets was that next year, in terms of rate hikes, they were projecting rate cuts, and they penciled in 4 rate cuts for next year, and they changed that. They changed that from the last meeting to this meeting, that, hey, we don't see 4 rate cuts. We actually see now 2 rate cuts. So they took rate cuts off the table, or I should say, they took less rate cuts off the table. Sorry, more rate cuts off the table. So basically, they're projecting that they're going to see less rate cuts, and that was a shocker for the equity markets and for the bond markets, because, hey, that means you're going to keep things a little bit tight. But if you sit and think about it, the GDP going up, unemployment rate not that high, you're revising it lower, inflation where it is, you're saying less rate cuts, you would think, okay, this is kind of soft landing data, soft landing projections. So that should be a positive thing. And eventually the markets, they were trading sideways, and it went back to the original price before the press conference at 2:30 p.m. and bonds shrugged off the move, at least the long end. Stocks also did the same thing. You saw a nice spike up in equities and bonds. The 2-year also spiked up 75%, reversed 75% of the sell-off that it had initially at 2 p.m. Basically suggesting that, okay, this may not be that bad. We're still getting the rate cuts. What's there to panic about, right? 2 rate cuts. They're just saying that, hey, we're not going to do more rate cuts because the economy is strong and resilient. So this looks like soft landing. Now, when the press conference came, that's when things changed, right? That's when Jerome Powell came out and said, okay, guys, we've got a dual mandate. We got to focus on jobs. That's part of our dual mandate. And the second part is inflation. And he kept going after inflation in this conference as expected, as he usually would. And he kept saying that, hey, we need to get to the 2% target. We need to get our inflation lower. There are some, variables or some stickiness and, the resilience in the market, in the economy and so on. So we're after this inflation, bringing it down, and we're going to do everything that we can, which is as expected. But what threw the markets into kind of a tantrum, or the sell-off that you might have been seeing where stocks and bonds completely flipped and reversed and was selling, was that going back to those dot plots again, those rate cuts, less rate cuts, and linking that to a comment that Jerome Powell said that soft landing is not our base case. So there was a question about soft landing from the reporters, and Jerome Powell made it very clear that soft landing is not our base case. And then he stepped back and he said, okay, obviously we are trying to, reach for soft landing. Our goal is to achieve soft landing. But then why did he say soft landing is not our base case, right? That's a one big red flag. Basically telling you that if there's no soft landing, then what are we going to get? A booming economy, right? Does he think, shouldn't that be reflected in the projections? Well, what would he be inferring to or saying that if soft landing is not the base case is basically pain is to come and hard landing is the likely scenario, which I've been saying on this channel for a very long time. I know many of you probably who are watching or been watching be like, okay, when's this hard landing coming? It doesn't come very fast. This is not GameStop. This is not crypto, Bitcoin, where you make 100% in a very short period of time. This is the real economy. And the real economy has these indicators and these economic indicators that take time. They lag. The money that has happened, that was printed during COVID, that is slowly diminishing. Companies out there just don't start laying off, projecting that, there's going to be a recession, so fire all your workers, because what if you're wrong? Then you got to hire all those workers and then you got more costs. So it takes time, right? So in order to get that hard landing recession scenario, you need an event. That's what it is. So if there's an event, a credit event, that's going to be the kicker that creates that hard landing scenario. Until then, you're going to see volatility, sideways action, confusion in the markets. Are we getting more? Are we not? And guess what? If the economy is still resilient, still doing fine, and inflation is not coming down, why? Just ask yourself this question. Why would they cut? Economy's fine. You can handle the tightening. Why do cut? If I cut, then inflation is going to, go rampant again. We don't want that, or the Fed doesn't want that, right? So keep things tighter for longer, and if things are getting better, then tighter for longer, or maybe even, hiking more. And we'll see how the data comes in, the jobs data, the data even next year, how the economy plays out, how all these things work out, and whether, we will see the economy continue to be resilient until there's some sort of event. And slowly you're seeing a lot of companies out there feeling the pinch, the pain. Just look at the airlines industry, seeing a slowdown in demand, and you're starting to see pricing being affected by airlines and a lot of companies out there, right? Especially, if they're non-essential items, if they're luxury goods, right? Then, you're going to see that, hey, those prices are going to come lower because more of the money is going to essential stuffs like your food and shelter and water and etc., right? So that's going to be important. Another thing to note during the FOMC press conference, which was really funny, is that they don't know where the terminal rate is. And they said that we will know once we get there. That is too funny. We will know once we get where the terminal rate is. So basically saying that he does acknowledge that we're in restrictive territory, but we don't know if this is the end point of rate hikes. I mean, that terminal point, if the current rate hikes right now are not bringing inflation down as he expects, then that means that the real terminal rate where interest rates should be sitting at might be higher. And they'll just keep hiking until they figure out when that terminal rate is. So when is that terminal rate? It would be interesting if reporters went out and asked that, when is that terminal rate? What will you see that what do you have to see to say that, okay, this is the terminal rate, this is where we pause, this is where, we're at a good level? Because he said we don't know. We will find out when we get there. Okay, you'll find out when you get there. That means when you eventually get there, then that means probably inflation has come down well enough for you. And inflation comes down well enough for you, that probably means that people are not spending that much, and that's not seeping into the CPI and inflation. If that's the case, that probably means hard landing or something is happening in the economy, meaning the shit hitting the fan, right? So when that will happen, we will determine when is the shit hitting the fan is really what he's trying to convey there. So all in all, after, that press conference, stocks just, a whole day, the next day forward, just selling off, bonds as well. And you just had full panic in the markets. We'll see how long this lasts. We'll continue to watch the data, continue to watch oil as well, as that trades around the $90 per barrel. If that continues to go up higher, that will seep into the inflation metrics. Although, yes, Powell said, we see through oil. Its volatility, blah, 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 meaning it doesn't mean much for him. Let me tell you something. It will mean something if oil starts to go to $100, $120, $130, and so on, because that's going to seep into the consumer's expectation. Guess what's going to get political also next year during the election? They're going to come, the government's going to come after Powell. Like, what are you doing? Can't get inflation under control. Oil's going crazy. Yeah, sure, they may play the SPR reserve kind of game and pump those, supply into the market to bring the oil prices lower. But hey, they will start to question the Fed, like, hey, inflation's gone rampant. It's your fault. Why are you not doing anything? And he will react. And he was reacting to oil and to headline inflation, which is affected by oil before. I don't know why he says he sees through it. Maybe he sees through it because, yes, oil is volatile. That's one point. The second point is maybe higher oil prices are actually going to lead to disinflation. Crazy, I know. How could you say that, Daniel? Well, why do I say that? It's because if there's higher prices, again, ramping back up again, consumers are going to feel the pinch. They're going to slow down even more on their spending. Demand's going to crunch. And again, you get that event. So one leads to another. Credit event, crash, hard landing. There's got to be an event. That event happens. Then inflation comes down. Powell is successful. And then they go back to easing again. The cycle. It's just all cycles. It's all cycles. That's how it works. That's how the economy runs, and that's how the central banks have been playing this game for a very, very, very long time. Anyways, let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.